Have you ever noticed how the top producing loan originators that consistently do great volume have great referral partner relationships? They have relationships with realtors, builders, accountants, financial planners, and insurance agents. What's their secret and what's the strategy? How do they nail that first meeting? How do they cross-sell every listing agent on every transaction that they do? How do they connect with these valuable referral partners? I'll tell you how they do it. They use the strategies included in the complete referral partner success system, an easy to follow step-by-step training that will teach you how to attract referral partners to significantly increase your leads and grow your business for the long term. It's a 10-level easy to follow process that includes over 3 hours of videos and over 20 powerful scripts in video and transcript format. For a limited time, podcast listeners get 50% off. It's normally $899. And as a podcast listener, you get the product for $449.50. Use the link in the podcast description for more information to get your 50% off discount, or go to www.performance-experts.com. I hope that you enjoy today's show. Hey everybody, and welcome to the 360 Experience. I'm your host, Tim Braheem, and today's guest on the show in this episode is Trevor Carlson. He is the founder and top producer at Heritage Reverse Mortgage in Southern Utah. I've known Trevor for about a year and a half now. He is a member of the Leadership 360 family, so we've gotten to know each other quite well, and he's really a remarkable man. I mean, you want to talk about somebody who has a high level of integrity and a real passion for what he does. Trevor is really at the top of the list, and he's a specialist in reverse mortgages. He is ranked in the top 10 originators in the United States in that category. He focuses solely on reverse mortgages, and we're going to talk about why that is in our conversation. We're going to start this conversation by giving you a bit of a background on him and having you have a little bit of an understanding on his maturation from the beginning when he was focused on forward mortgages, and then how he got into reverse. And then we're going to dive into some real extreme tactics, everything from how to market the product, how to sell the product, etc. So without further ado, I hope that you enjoy this conversation with Trevor Carlson, and welcome to the 360 Experience. Trev, happy holidays, man. How are you?
Good. How you doing, Tim? Merry Christmas to you guys.
Thank you. Merry Christmas to you too. You never know what to say anymore, right? It's like you go with the generic happy holidays thing, but yes, Merry Christmas. And what's going on in the Carlson household right now? A lot, I bet.
A lot for sure. You know, fortunately, I have a great wife. So having 6 kids in the holidays isn't too overwhelming. Actually makes Christmas a ton of fun having that many kids. So
I bet. Tell us about their age range.
So our oldest is she'll be 14 in April, and then our baby is turning 3 in February. So 2 to 13 is where we're at right now. So
got some built-in babysitters coming down the pipe right now, huh?
Oh, it's awesome. I love talking to people who say they're overwhelmed with 2 or 3, and I just tell them, look, as soon as one of them hits 11 or 12, you're solid. You got a babysitter, and life's beautiful again. So
yeah. Well, I bet it's going to be just super fun it has to be a fun time during this time of the year for you with all the kids and a lot of good energy in the household and all of that. So
yeah, that's great.
You're going to be able to take a little bit of time off?
Planning on it. I don't know. Holidays are one of my favorite times of the year to work because nobody else is, right? I can do more of my creation during those times, but yeah, I plan on taking a few days next week. So
yeah, I want to talk about that. I was checking out your bio that you sent over, and there was something I learned in there that that I want to explore a little bit more deeply, which is the creative aspect. I mean, I actually never really connected the dots before of he went from being a forward mortgage originator to a reverse mortgage originator. That's a big transition, and it had to have entailed a lot of strategy and working on your business strategically to remake yourself, because that's kind of a complete redo. But before we get into that, let's just kind of begin at the beginning with, like, when did you get in the business? I think it was 2006, right? In the worst of times, right? And tell us a little bit about what you were doing in those first few years, and kind of give us a 50,000 foot overview of what had you actually going into reverse mortgages, which is your specialty.
Yeah, sure. No, I'm happy to. I love talking about this. Whenever I hire people, I give them a little bit of this backstory too, so they have an idea or understanding of who I am as a person as well. And so I started my career in September of 2006. It was funny at the time. I was actually framing houses with one of my brothers during the day. I was waiting tables at night at Wingers, and I was 20 something and just kind of enjoying life. And it was interesting in the course of 1 week. I mean, obviously the market's booming at that point. In the course of 1 week, I had two separate people who I waited on. And at the end of the meal, they said, "Here's my card. Call me on Monday. I'd like to help you get into mortgages." And I had no idea. I didn't know what mortgages were, right? I knew people borrowed money to buy homes, but I mean, the word was foreign to me. And I just kind of blew it off. I had no interest. I'm like, yeah, thanks, but no thanks. You know what I mean? And I came home from work one night and my mom said, "Hey, your brother-in-law just called. He's got a friend that's moving up here and starting a mortgage company and wanted to see if you know anyone that's interested." And something just clicked. I want to see what that's all about. And so, that's how I met James McPherson. I don't know if you know him. He's the president of Academy Mortgage, and he became my mentor. He got me into the business with Countrywide. I didn't know what I know now about Countrywide, but it was a great place to start in the career in my business. That was September of 2006, and as you mentioned, everybody else was still doing pretty well, but within 6 months, the market was starting to dwindle. By the next year, things were really starting to look south. We were having discussions about subprimes and those kind of things falling apart. And, but it was perfect for me, looking back on it, 2009 to 2012 were rough years. I mean, there were times in my career where I'd come home almost in tears thinking, what am I doing? Why am I still doing this? You know what I mean? And something inside me just wouldn't let me quit. And so I just kept at it, kept going, innovating, thinking, testing, trying just the most silly, ridiculous things to build partnerships and create, opportunities. And as I look at it now, and I watched your podcast the other day where you were saying the same thing, where the biggest innovations of your career happened during down markets. And that's exactly what happened for me. Beginning in that tough environment was it was exactly what I needed to learn how to thrive and stick to this business, which tries to shake us out sometimes.
Yeah. So. Like the thing, it's interesting. First of all, I'm glad that you finally got the message from the universe. I mean, it had to have been a third time. They're like, God, the universe, whatever, was going, "Hey, Trevor, wake up here. You need to be in this career." But that's a really cool story. And, it is a blessing in a lot of ways, whereas some people view it as a curse that, they just, they're in the business in a tough time. But to start in the business in a tough time can be quite a blessing because you're taught to be resourceful. You're taught to be strategic. You're taught to be forward thinking and planning oriented, and you're taught to be a real business person, right? So you start figuring it out in 07, 08, you're kind of a mad scientist. You're trying to figure out what's the sell here, what's the way to cultivate relationships. And you were specializing, as I recall, in like government loans and things like that. Tell us a little bit about that. And then when did the transition occur, and what was the transition piece, like said, I need to go full on into reverse mortgages?
Sure. So I learned on early in my career, one of the successes that's always one of my secrets that's always helped me to be successful is focus and specialization. And so in those early years, I was in a little town called Cedar City, Utah, which has about 40,000 people in it. And it's a big USDA town, right? I think my median or my average loan amount was like $130,000 or something. It was ridiculous. And so I just recognized that there was this great need for USDA, for first-time buyers, for refinances and those kinds of things. And so I just mastered the product. I got to be on a first name basis with the underwriters at USDA and to the point where they would call me once in a while and ask me what guidelines were. And And so I just became known in the area as the guy that does USDA. Somewhere around 2012, I was recruited by an old friend from Countrywide to go to another company that moved me to St. George, Utah, which is a little bit south of that. And his whole platform was it was a VA stream shop, right? We just did tons and tons of VA streamlines. And likewise, that's what helped me to transition. I kind of gave up the USDA hat and I said, okay, VA, FHA, I'm going to master this product. And within a couple of years, I was a top producer in the company. I knew VA and FHA inside out. And so it was about 2016. It was early 2016. Life was great. I mean, I'm managing their national division, making a couple $100,000 a year. Life was pretty cool for me at that point. And I'm out running one morning, and it's funny you talk about God and the universe, and I'm a spiritual guy as well. So I'm out running one morning, and keep in mind, I've been in the business 10 years now. I have an idea what the mortgage industry is all about, right? And the idea of starting my own mortgage company was just a silly idea. I would never do that. I had no ambitions for having my own mortgage company because of the regulation, the CFPB, everything else. And I'm out running one morning and the little voice says, Trevor, it's time to start your company. And I said, no, thanks, I'm good. And I just keep running, right? A couple of weeks later, again, the thought comes, Trevor, it's time, start your company. And I said, okay, I'll look into it. And the company just kind of happened. It was interesting for as much fear as I had going into it. Don't get me wrong. I did a lot of work to make it happen, but the pieces just kind of came together. It was bizarre. And during that process, again, the little intuition came and said, focus on reverse mortgages. And so again, this was kind of a leap of faith for me because at that point in my career, I had done 2 reverse mortgages in my life. I knew they were a good thing, and I saw the vision in the couple of people I'd helped. But from a bird's eye view, I had no idea what I was doing. But I said, you know what? Listening's been a good thing for me so far. I'll do it. And I went all in and started Heritage Reverse Mortgage. And it's funny, and I apologize, I'm kind of long-winded here, but that has been the single defining characteristic of my career is that specialization. I had peers and friends and competitors in the area who, my major competitor in the area actually went on TV or on radio and said, oh, there's a new company in town that just does reverse mortgage and they won't last 6 months because you can't succeed in this product alone. But it's been that specialization and getting through the tough times because, yeah, they were tough. Don't get me wrong. Starting out doing one product, it was rough, but over time I became known as the HECM guy, the guy in town that does reverses, more reverses than anyone. And as a result, again, I have underwriters call me with questions. I have other lenders call me with questions on how to structure their loans. I've just become known as the guy that knows this product. So
I heard a couple of things there that I want to highlight for the listener that I think are super noteworthy and important. And then we'll dive into 2016 and beyond, starting as best I can tell when you're about 34 years old, you started your own mortgage company. But I want to read something that I posted this morning in the personal development WhatsApp thread. Did you see what I posted this morning by any chance?
Which one?
It's a quote from Young Pueblo, which is for the listeners. Young Pueblo is an author. I'm sure that's probably not his real name. That's his pen name. He's brilliant. I highly recommend his books. They're a part of my morning routine. I read a passage every morning from Young Pueblo. This is from his book, Clarity and Connection. And it's so interesting because I think you'll see the connection immediately with what you just said. So I just grabbed my phone. Let me read this. Real courage is listening to your intuition, even when society and people in your life advise against it. A lot of advice comes from fear, people wishing you to stay with the herd and to do the normal thing. Taking a calculated risk is not recklessness, it's fearlessness. And it's like, when you're sitting here telling this story, I'm thinking of this quote and I'm like, there's a lot of bravery there, man. Like, I mean, you're like, I have like that fear based thinking was, I have no desire to start my own thing at CFPB, blah, 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 blah. Like the storyteller is like making up all these reasons why not.
Totally.
But you seem to have this like really like tapped in intuition, which I want to speak to that for a second for the listener too. Like I've explored intuition to great lengths. And it's kind of interesting because there's, I'm sure you've heard people say, oh, so-and-so is really intuitive, but I don't have any intuition. That's not true. I firmly believe everybody has intuition. It's whether or not you're listening deeply within as to whatever your connection to source, whatever your definition of source is telling you, listening to your inner wisdom. And it's kind of cool because in these two stories that you've told so far, it's like you're getting some very clear messages. And in this particular case, you chose to heed the call, to heed the call to adventure and start your own business and become a part of the hero's journey. If you want to go through the Joseph Campbell lens. There's also something else, though, that you shared that I just don't want anybody to miss out on, that is a kind of a common theme so far in your career. And it's that word focus. It's not trying to be everything to everybody. It's really being a master of your craft, a student of your trade, really devoting your time to being an expert in whatever it is that you're choosing to focus on, whether it be, USDA, VA, and now the reverse mortgage game. And that's something that I used to refer to as essential knowledge. I mean, it's the foundational piece that a lot of originators skip over when they first start in the business because they are so hungry to make money. And there isn't a lot of training and education out there that is made available to them to really become a master of their craft, which is the understanding of financial structure, which is the understanding of the financial markets and inflation. It's the understanding of underwriting guidelines. But these are the pivotal pillars to being a successful salesperson, because I would imagine you have stories of opportunities that came your way that had you not devoted yourself and focused on having the wisdom and knowledge, you would have completely cut short a relationship that now has been something significant and substantial in your career because you had the knowledge to take advantage of the opportunity and you had the knowledge to have the confidence necessary to sell yourself with conviction and to be convincing at point of sale, which I know you're not a salesy person, but that's not to be confused with just having confidence because you know your stuff. And so I think it's just so important what you've just shared. You've taken seriously focusing on one thing and devoting yourself to being an expert at that one thing. And it doesn't actually have to be that much more complicated than that. So there's a lot of, let's transition to the subject matter of reverse mortgages. We're going to spend, pretty much our entire time on this because there's so much to talk about. And I can't imagine a better person to speak to it than you. So there's a lot of retirement stats out there right now. And listen, I've known you for a little over a year. We've had this conversation several times. You know how I feel about this product. I've shared many times that if I were getting into the business right now, this would be my focus without question and for a lot of reasons. Tell us why it's important, first of all, for originators to consider focusing on reverse mortgages as a pillar of their business, and just give us some statistics as well.
Well, and I think this is there's really something important to be said here. I think it was Warren Buffett or Steve Jobs or somebody who said, going back to your point there, it's not about the one thing you say yes to, it's about the 99 things you said no to. And just as you're talking, that ability to focus on one thing and become the very best at it or try to be the very best at it, that's where those opportunities come. And so, kind of stepping into your question there, that again, I think is another principle for success that I think people need to understand is you got to be passionate about what you do. And I think, again, that's why it was so easy for me to do this over my career, to focus on one product at a time, because every time I did that, I had a vision for how I was making somebody's life better. It's great in mortgages. We make a ton of money. That's all exciting and whatnot. But the idea of going to a closing for a first-time buyer, a young family who's about to have a kid and then just be so excited about life and the fact that they're getting into their first home, that's what made USDA so cool. Working with veterans who are struggling to survive every month financially, and we were rolling all of their debts together and consolidating it all. And so again, I felt passionate about that, but no other product in my career has created this same kind of passion and displayed the same kind of need to me like reverse mortgages do or like HECMs do. I'm going to diverge a little bit if I can, and this, you may need to cut this story out because it's a little bit long, but my wife went to Walmart the other day and she goes into this lane, and she looks up and the checker is probably in his early 80s. Earl is his name. And as soon as she pulls in, he clicks off his light to close his lane. And people keep trying to come in behind her and he keeps waving them off. Go, I'm closed. Go to the next lane. And she's just like, oh, this guy's cranky. You know what I mean? He's angry. This is awkward. And so he starts in on her stuff, beep bag. He's just putting all of her stuff in her bag. And about halfway through, it's as if he just gives up. He stopped bagging everything. He would beep it and then he'd start stacking it, beep it, stack it. And she's like, can I help you with that? So she starts bagging her own stuff, which is fine. But at the end, he didn't even pull it off the belt. He just grabbed his little gun and started beeping it on the belt, and she's like, man, what's going on with this guy? He must be having a bad day or whatever. And at the very end, she pays and he looks up at her and his face just changes. He just gets a giant smile on his face, super friendly, and says, Merry Christmas. And it hits her. It's not that he's cranky. It's not that he's having a bad day. It's that he's working at 80 plus years of age. You know what I mean? He's been on his feet for 4 or 5, 6 hours today already at Walmart. You know what I mean? And he shouldn't be. At 80 something years old, he should not be making 12, 13, 14 bucks an hour working at Walmart, bagging somebody's groceries. And so the hardship of this, the reason this hit her, and she told me this story, what I've just told you characterizes about 60% of retired Americans right now. The average income for retirees, well, let's use the statistics. Social Security every year publishes their statistics. And according to them, last year, roughly 65% of all retirees relied on Social Security as their primary income. And the average check last year was about $1,560. And so if we're doing the math, that means that these millions of Americans who've worked for 40 plus years are now living on a fixed monthly income of about $3,000 or less. That's why they're going back to work at Walmart. That's why they're going back to do whatever they have to do to survive. It's not because they want to. They're not trying to climb the Taco Bell corporate ladder. They're trying to survive during Christmas when inflation is out of control. You know what I mean? So
yeah, they're just trying to have their basic needs met, right? Like, I mean, just to be able to eat a reasonable meal. So you mentioned purpose, right? So like I'm already connecting these dots. Like that's a powerful story. I'm not going to cut it out. It needs to be heard. It's a great example. That's what drives you, and that's what drew you to reverse mortgages. Tell us a little bit about the longevity statistics too, because that plays into it as well. I mean, we have people living a lot longer, and give us some of those stats. Let's frame that up, and then let's get into the nitty gritty as to, why this product is so special, because it truly is. But first, let's set up the reason why it needs to be made available to anybody or to a lot of people out there.
For sure. Well, I mean, the reality is that, retirement is not built for us to live a long time, right? People don't understand this, but and maybe I can send you the graph or whatever. You can post it on there on this. But if you look at longevity from 1900 to today, in the year 1900, longevity was something like 55 or something. It was ridiculous. It was so low. When Social Security was implemented in 1935, life expectancy was 59. And so the point there, if people are connecting the dots, is that if you lived long enough to qualify for Social Security in the 30s, it meant you were already 3 years over your expiration date. The government wasn't planning on us to live into our 80s like we do today. And think about this. What if we do cure cancer? What if we cure diabetes or Alzheimer's? It's very realistic that my kids, my grandkids will live way past 100, 105, 110. How do we do that if we keep retiring at age 62 or 65 or even 70? You know what I mean? And And so that's one of the major issues. And so imagine this. Again, here's another statistic that Forbes put out a couple of months ago, where they said that in 2019. Let me pull it up so I'm not. Median net worth of retirees aged 65 to 74 in 2019 was $266,000. And of that, $240,000 was home equity. That means that, imagine you're retiring today at 65, you're going to live another 20 to 25 years, and you're going to do that on a fixed income of about $2,500 and about $26,000 in the bank. And so again, it's scary. You know what I mean? Again, this is why so many seniors are going back to work for $12 an hour just to survive. And this again goes back to the purpose I was talking about. This is why I get so many tears at our closing tables, because when we're able to step in with a reverse mortgage, it is absolutely life-changing. We're eliminating the primary expense that most households have. We're consolidating debt. We're giving them a cash reserve of funds that they can dip into if they hit another emergency or want to go on vacation. It's life-changing for people to be able to go through this process and completely turn their finances upside down. So
let me summarize, and then I'm going to tee you up for a quick story that I want you to share, because I think it's a really powerful one, and I'll prep you for it right now. It's like the grandma or grandpa who sends the $100 in a Christmas card to their grandchildren versus the antithesis, which you know what I'm talking about, and I'll let you just paint that when you can. But so summary, people are living longer. Okay. Things are getting more expensive. People own homes that they've been taught that the American dream is to pay them to zero. Okay. So they've worked really hard to get them down to nothing, but they don't have access to something that really represents, in most people's cases, in excess of 90% of their net worth, their home equity. And there is a tool. Now, first tell the story of the Christmas card, and then let's go into how this reverse mortgage is not the reverse mortgage of 2 decades ago that has a lot of negative publicity associated with it. And I want you to draw the parallels between the two, please. But first, tell the story about the Christmas card. Thanks.
So I appreciate you bringing that up. And so again, another reason why this product is so meaningful for me personally is because of my own family situation. So I'm the youngest of 8 kids. My youngest is grandchild number 40 for my parents. And so we have an enormous family. It's fantastic when we get together. Unfortunately, both of my parents have passed away. Both of them passed away in their 60s, so they're relatively young. Both of them had phenomenal work ethics. Both of them worked for decades, right? My dad was a college professor. My mom was an administrator at an elementary school. And so when they retired and their kids all grew up and moved on, it's as if they lost their purpose, because they no longer had kids to raise at home. And they just didn't have the finances to experience life. And I remember every year my mom used to send us Christmas cards like you're talking about, and there'd be $5 for each kid and $20 for me and my wife. And I'd look at it and I'd be like, "What are you doing?" And I'd call her up and I'd be like, "Mom, stop it. This $30 is wonderful. I appreciate the sentiment, but I'd rather you just come down and visit us." You know what I mean? You sending $200 between all of your kids and grandkids is super nice of you, but you don't need to do it. We'd rather just be with you, right? And she said, "No, I've got to do something. I want to do something so you guys remember me." And I'm like, all of us make more money than you, right? Come down and see us. Let me send you money. And she'd be like, no, it's okay. But she fit squarely into that category I was talking about, a fixed income of about $30,000 a year, and $14,000 to $15,000 of that paid for her mortgage. You know what I mean? And so at the time when she passed away, oddly enough, she passed away in July of 2016, 2 months after I started this company. And so I didn't do a reverse mortgage for her because I didn't see at the time the beauty it would have been for her. But you know, when gas prices go up 20 cents for me and you, it's kind of annoying. When it goes up $1, whatever. You know what I mean? When gas goes up $1 for somebody living on this kind of a fixed income, it stops their life. They start having to think about, well, should I fix the furnace this month, or should I fix my tire? Should I get that hip surgery, or should I fix my water heater so I can take hot showers? You know what I mean? And it's tragic. It's tragic that people are experiencing this after decades of hard work, serving their neighborhood, their communities, and their families.
So before we get into comparing the two, I actually want to ask you for one other statistic. Let's just give the listener a scope of how many people there are out there that could be helped, because I think it's a staggering statistic, right? Like, it's the most underserved market that exists in the mortgage space by far. And it's probably, without question, the most noble cause, because you can actually really make a meaningful impact on someone's life. So instead of them having to, put $5 in a holiday card and not ever see their family, they can actually get on a plane or take a train and see their family because they can afford it. And there are a ton of people out there that have a ton of equity right now. So it's kind of like the perfect storm, because property values have gone up so much. So what's the opportunity there? How many people are in need of being served with this product?
So from a professional standpoint, it's staggering and disturbing, to be frank. I think right now, last time I looked at the census, we have roughly 41 million Americans who are over age 62. And again, going off of the statistics that Social Security gives and some of these other, whatever, of those 41 million, roughly 80% of them, 78% of them own a home, which is great, right? Homeownership has worked for our older generation. But of those 80% homeownerships, more than 60% of those still have a mortgage they're paying of, on average, $500 to $1,000 a month. So I'm throwing a lot of numbers out there. Let me kind of bring it all together. Right now, today, the stories I've been telling you about my mother, about Earl, essentially 21 to 22 million Americans fit into that category in varying degrees. Some are a little better, some are a little bit worse, but somewhere around 21, 22 million people have equity in their home, could do a reverse mortgage to make their life dramatically better, but for whatever reason, they're continuing to hold on to those old ideas that you talked about, and they're living financially distraught because of it. Now, on the sad side, statistically, this year as an industry, we did 61,000 units, 61,000 reverse mortgages, when we have over 20 million people who need it today. And so we'll kind of get into this in terms of what's holding the industry back and what needs to change before this gets mass acceptance. But by and large, as you're saying, grossly underserved. This community, this product is grossly underserved, especially considering the amount of good that it can do in the world.
Okay, so I'm going to tee up. I'm going to play devil's advocate with you. Yeah, that's great for you to say you're the one selling this product. I mean, you're the one who's making a lot of money on these things, but there are a lot of people that were taken advantage of over the years that, they lost their home. They didn't know what they were getting into. Their children, their inheritance is being stolen from them because this thing's going into the negative every month. I mean, tell me about that. Counter that for me and tell me why this product is different now.
I love this. Dave Ramsey has a video on YouTube that has a ton of views where he's talking about this exactly, where he's telling people, reverse mortgages are the devil, stay away from them, they're evil. And so I did a rebuttal video to it, and I don't have nearly as many videos as he does. But, when I jumped into this business, obviously I was hearing a ton of that kind of feedback. And I thought, what have I done? Maybe I'm not seeing something here. And so I started digging myself to see what's the truth about why all of the myths and negativity around this product. And so Dave Ramsey, in his video, he uses a statistic where he says 15% of all reverse mortgages fail, and that's why you shouldn't do it. If a product's failing that much, it's just bad for the community. It's bad for everybody. So let's talk about that. The old reverse mortgage, and when I say new reverse mortgage and old reverse mortgage, the cutoff date was somewhere around 2017. Okay, so from 1988 to 2017, that's the old product. The new product is everything after 2017. The issue with the old loan is that it was designed with the bank in mind. The idea was, yeah, sure, we'll let you access the equity in your home. We'll let you live the rest of your life with no mortgage payments. But we're going to charge a high interest rate. We're going to give you a high loan amount so that when you pass away, we get the home. Essentially, all the equity that's in the home now belongs to the bank, right? And so for obvious reasons, that was a problem. It was a problem for the homeowner. It was a problem for FHA. It was a problem for the banks even, because the vast majority of reverse mortgages went upside down. If the homeowner had the loan for 10, 15, 20 years, the loan was upside down. The mortgage had grown so fast that it had dissolved all of the equity in the home. And so that's why you hear stories about, oh, grandma did a reverse, and when she died, the bank just took it from us. We didn't have any choice. It's because grandma's loan was designed in such a way that it had high interest rates that really dug into the equity of the home.
What were the interest rates back then on that loan?
So the mortgage insurance rate was 1.25%. The interest rates on the mortgage itself were 6, 7, 8%. I've seen some that were that high. And so, but it wasn't just the interest rate, it was the loan amount itself. Because in those days, the banks were lending 60, 70, 80% of the home's equity up front. And so the mortgage was just so disproportionate to the equity in the home that it ballooned. It shot up so fast that there was nothing left. So maybe before I go on, I need to clarify something so people understand maybe what reverse mortgages are and how they function.
Yes, please.
The basic mechanics of a reverse mortgage are exactly the same as any other mortgage. You borrow money from the bank, and until that money is repaid, the bank is going to charge interest for the money they've loaned to you, right? The only difference with a reverse mortgage is that payments become optional. That means you're still charged interest every month. You own this home. You can plant a tree. You can paint it purple. It's your home. You can sell it. It's your home, right? But where payments are optional, the interest that you're going to be charged every month is added to the balance of the loan. And so that's what causes the mortgage to grow over time. You're not making that $1,000 or $2,000 payment every month. And so the bank is adding, $800 or $1,500 of interest onto the balance of your loan. And so again, in the old days, because that interest addition was so high, the equity in the home was wiped out really fast. But that's one of the key differences they made with the new reverse mortgage is that they lowered the interest rates, so people were being charged less. They lowered the loan amounts so that the loans would grow slower. And so this is what I love about the loan now. And so let me give you just a simple example. Let's say I have a client today, and they've got a $400,000 home, okay? At their age, they can do roughly 50% of that $400,000 for their new mortgage, okay? So they have a $400,000 home, they have a $200,000 mortgage. And let's give them a 6% interest rate, okay? If we fast forward a year from now, their $200,000 loan will grow from $200,000 to $212,000, okay? So mortgage went up. But what's happened to their equity? Okay. Let's say their $400,000 home only averages the 4% appreciation, right? Historically, we average about 5%, but let's say 4%. If their home only goes up by 4%, then their home value has gone from $400,000 to $416,000. They've saved over $12,000 in mortgage payments, and their equity year over year has still gone up $4,000. Does that make sense?
Of course, yeah.
And so that's the difference of the new reverse mortgage is that.
But in the old reverse mortgage, though, the same could be said, right? I mean, you could still have property appreciation, and I'm going to continue to play devil's advocate. I mean, right now, correct me if I'm wrong, you're probably looking at about 7% here at the end of 2022. So the rate isn't any better than what you had articulated in the old reverse mortgage. So really, the differentiating factor is just simply that you're only allowed to borrow up to 50%. So you're not going to have the accumulation of money going up as rapidly because you're not borrowing as much, and you're not taking out as much equity in the initial loan. Is that right? Or are there other subtleties?
And so at first glance, a lot of people would say, well, that's not fair. I want more of my money right now. Right. But you need to understand this is the safe, the wise alternative. Because again, in those old situations, if somebody borrowed 80% of their equity on day one, their loan's going to grow so fast, they're going to be out of equity within just a few years. But at this rate, as I mentioned, since 1970 till today, even including the crash of 2008, we've averaged 4.8% appreciation. And so most of my clients have an interest rate that generally averages around 4.5% to 5% over the past 10 years, right? And so, yes, interest rates are really high right now, but we know they come back down. I guess what I'm trying to say here is that this gives people the best of both worlds, where we can eliminate your monthly mortgage payment, we can consolidate debts, we can get you some of the equity in your home, but we're also leaving a substantial equity reserve that provides for you down the road. It makes it so you can sell this home and have a significant amount of equity left to buy a new home. When you do pass away, there's going to be a significant amount of equity left for your kids to inherit. And so it fixed that issue of banks taking homes away from people. One other thing that I want to add to this, maybe to clarify why the old reverse had a high default rate. The only reason somebody with a reverse mortgage can lose their home, there's three reasons. Number one is that they stop living in the home, right? They go into a care facility, they go move in with their kids. If they no longer live in this home, then they need to sell it or refinance it. And again, in the old days, that's one of the reasons why banks were forced to foreclose on these loans, is because nobody was living in the home. The second reason, and the most common, is actually it's not the bank's fault, it's the county. If you don't pay your property taxes, doesn't matter what kind of mortgage you have, FHA, VA, reverse, no mortgage at all. If you don't pay the county the property taxes, they're going to foreclose on your home. And so that happened pretty regularly, where the husband would handle all the finances. He passed away. Wife just assumed all the bills were paid. There were no payments. After a few years, the county stepped in and foreclosed on the home, not the bank. And so with the new reverse mortgage, and then the third reason, of course, is that the home is no longer livable. If for whatever reason the home becomes unlivable, then that's another reason somebody could lose a home. But aside from those three reasons, a reverse mortgage is guaranteed until age 150. You cannot lose this home as long as you live in it, you pay your taxes, and you keep it safe.
So I'm going to use myself as an example. Okay. My mom just turned 80. She has a home worth about $1 million, I guess. It's gone up. I don't know where it's at now. She doesn't owe anything on it. She's actually doing fine. Like she can easily live off of my dad's pension that she inherited and her Social Security and all that. But let's just hypothetically say that, my mom wanted to, kind of up her lifestyle a little bit, or let's say that she didn't have the pension that she has. Walk us through the mechanics of how that would work. So like, I'd like to have you explain exactly what her options would be and why she may want to consider them. And then explain also, Trev, how are you selling me on doing this? Right. Because I'm the inheritor. Okay. At some point in time. So I'm going, well, I don't want my mom to be talked into doing something that, isn't going to, benefit me long-term. Unfortunately, there are a lot of people that will look selfishly only at their own situation and not the well-being of their parents. So
Sure.
kind of cover all of that, would you?
So this is a good discussion, and it's important that we understand that the reverse mortgages are the most powerful when they're seen as a financial planning tool and not as a mortgage, not as a lifesaver. Now, I know a high percentage of people use a HECM as their last resort, right? But the tool is so much more powerful if it's brought into the conversation much earlier on. And so, let's use your mom's situation. And so she's got a $1 million home. Let's just use round numbers so it's easy to understand. Let's say she gets the same 50%. The older people get, the more money they can borrow out of their mortgage. But again, let's just use that 50% mark. So in her situation, we'd set up a $500,000 growth line of credit. Now, there's a couple of cool things about this growth line of credit. Number one is it's just like any other HELOC or credit card in that you're only charged interest on the money you've actually borrowed, right? So even though she could borrow $500,000, let's say she only takes $10,000 this year, She's only charged interest on the $10,000 she borrowed. But to capitalize on that, what's really cool about the growth line of credit is that any money she does not use stays in the mortgage, and it actually grows by the same interest rate on the mortgage. So again, let's use round numbers. Let's say she has a 5% interest rate. A year from now, her $500,000 available line of credit will have grown from $500,000 to $530,000, right? And so in situations like this is I have clients that are celebrating right now with 7% interest rates because they have a $300,000 line of credit that's growing like crazy. And so for people in this situation, this is a great option for them in terms of alternatives, because let's use a few examples. Let's say I have clients that'll come to me and they set up their line of credit and they've got $50,000 at the bank in a CD that's getting them, 0.3% right now or something ridiculous, right? They could take that $50,000, put it on their mortgage, their line of credit. Now they're getting that 5% growth rate on the $50,000 versus the 0.3% growth at the CD. Not only that, but all the money, whenever they go to access this money from their line of credit, it is always tax deductible, it is always tax free, right? They're never taxed on any money they pull out of their home. Now let's maybe sell you on this now as her child. Let's imagine your mom has, she's got 401ks or pensions or whatever. She's got money invested with her financial planner. And her financial planner is pretty good. He can get her a return of 5 to 12% on any given year. And so he's doing a good job with the money that she has invested. What if she were to stop taking money from him as much as she's legally able to do, right? She says, okay, I'm taking $3,000 a month from my financial planner. I'm going to stop taking that money. And instead, I'm going to start drawing on my mortgage, because over here, I'm only getting charged 5% on what I draw, and it's tax-free. Over here, if I leave this money in, I'm getting a 8 or 10 or 12% return as long as that money's in there. And if I do take it out, it's being taxed at 20 or 25%. And so from your perspective as her son, which alternative is going to leave you more money, right? You're still going to inherit hundreds of thousands of dollars from her home, but likewise, you're also going to inherit her liquid assets of 401ks and annuities or whatever else she has over there. And so from a cost perspective, this is helping her to maintain her wealth and even grow her wealth at a higher rate.
I'm going to add another scenario that I think is correct, but you're the expert, not me. So I'm going to ask you to verify this. But would it not also be true that I need to be thinking about, my mom's, as she gets older and older, what type of care she may need? So if the objective is to not put her into, say, an assisted living facility and to keep her in the home because that's her home where she's lived for the last 45 or 50 years of her life, where is going to be comforting to her. It's close to my sister who lives just down the street. Wouldn't it make sense for me actually to take out the reverse now, not draw on it? And then if we need in-home health care, we actually have the ability to pay for it by using that line of credit to do it that we had set up in the past.
Absolutely. And not just that, but again, as you mentioned, your mom is fortunate because her home is free and clear. Most people don't have that luxury. You know what I mean? They have $1,000 monthly payment or something along those lines. And so to answer your question, absolutely. In your mom's situation, this is excellent because she sets up that line of credit. It's going to grow until she does need to start drawing on it. But imagine somebody who has a $1,000 or $1,500 monthly payment. And by doing the reverse mortgage, they're able to eliminate that payment. Now they can take that $1,000 or $1,500 and reinvest it in long-term care insurance, reinvest it in life insurance. And so maybe the kids do get less equity in the home, but now they have $1 million life insurance policy that they're going to inherit as well. You know what I mean? And so by freeing up that expense of what these people are paying every month to their mortgage, they have a lot of options, long-term care insurance, in-home care, and all of those other things that a financial planner could set them up to improve their situation dramatically.
Well, not to mention the fact that, like, if there does come a point in time where my mom does need in-home healthcare because I want to keep her at home, I'm going to be the one who's going to pay for it. So wouldn't I rather use the equity in the home to subsidize that rather than having to take it out of my investment accounts or feel the pressure of having just incurred some additional monthly expenses that I'm obligated to keeping her, comfortable and all of those things in the later years of her life. I can see now as we're going through this, why you say that it is a financial planning tool, because there are so many different creative iterations as to how you would want to strategically use this when life happens. Now, you referenced the fact that, there are people out there right now who, let's say, have $1,000 a month payment, and it's causing them to not be able to go anywhere, and it's causing them to actually not eat very well, because they can't afford, food, or in the case of the Walmart person, it's causing them to have to go to work. But if they could wipe that out and just basically not have a payment and allow for the interest to take over and maybe accrue the balance a little bit, what we're really talking about here is a lifestyle. I mean, my goodness, the latter years of our life should be the ones that are most special. And even, you're not as old as me, bro, but I'm 55 going on 56. I mean, I'm already starting to get to that point where I'm reevaluating what's important. To me, it's about being with family. It's about being with friends. It's about having laughs. It's about having company, not being alone, being with those that I love. And man, I bet, you fast forward, God willing, another 20, 25 years, if I'm still here, that's going to be probably the only thing that's important to me. And when you're crippled by excessive debt or not having any income, and you really can't do things, you can't go visit a friend of yours, that you haven't seen, in 20 years, who you really would love to connect with, at the later days of your life. I mean, this provides you with all those opportunities. So there's another iteration here that I want to make sure that people understand. This can be an incredibly effective tool for buying a home and going to, I'll paint a different picture. Let's hypothetically say that an elderly person or an elderly couple lives far away from their family, and the area that they live in is maybe less expensive than the area that their children live in, but they own their home free and clear or have a tremendous amount of equity. They can use that as a financial planning tool, as a strategic way to actually relocate closer to their family, can't they? And tell us about how it works with a purchase.
So not even just to relocate, to buy a second home. Maybe, I'm in St. George, Utah, which has a similar climate to Las Vegas. We're a little bit warmer. And we get a lot of people from northern Utah who will come down here and buy a second home. And the way they do that is that we do a reverse mortgage. And so in fact, to answer your question, they could either do the reverse mortgage on their home up north, buy the home here as their second home, or vice versa. We do a reverse mortgage on the home they're purchasing here in St. George. Again, they put down 50% or whatever it is based on their age and the interest rates. And so now they have two homes. They have a place in the winter they can come be closer to their kids. They have a place in the summer so they can get out of the heat. Now they own two homes with lots of equity and no payments on either of them. And so I love that you bring that up, because again, it's about lifestyle. Something you said there, Tim, that I want to point out to the people that are listening to this. I had a practice this year. When I do my end of year planning, sometimes I'll sit down and I will do a future vision of what life is for me, right? 20 years from now, 40 years from now, 60 years from now, 80 years from now when I'm already gone. And I'll just write out a page of, like you were saying, what has my impact been in the world? What is my life like? And something really stood out to me this year that I've never really noticed, but when I'm 10 years out or 20 years out, my mind is still very much focused on my career and money and those kinds of things. But even at this stage in my life, I can recognize that as a 70-year-old, 80-year-old, 90-year-old, when I've been gone for 20 years and dead, the thing that's going to matter most to me is the legacy I left and the time that I spent with the people that matter to me. And so again, going back to your point of how do I use this tool? to leave a better legacy to my kids, right? Sell the house where I'm at that's 500 miles away from my kids and buy a new home close to them, a better home, the home of our dreams, and have no mortgage payment on it. It's, again, I use the phrase all the time, life-changing, because it really is. I'm not kidding when I go to closing and people are crying on my shoulder because it was absolutely life-changing for them. It is such an exciting and fulfilling thing as a professional to experience.
What would it be like to have an ally, a partner, somebody who knew you well, who could help you see clearly the pathway to your success in your business and your life, how to develop relationships with referral partners, how to cultivate borrowers from your past client database, and how to create new opportunities in this down market? The Performance Accelerator private one-on-one coaching program is that program. It pairs you with a certified, highly skilled coach who will help you in designing the future that you want and need. Go to www.mortgagecoachingnow.com and click on Get a Coach to register for your free exploratory session. Or you can click on the link in the description to this podcast. I love that last part. Imagine that situation where, you're just, your surviving mother is still alive, but lives 2 states away. Mm-hmm. All she really wants is to be close with her family at this point in time in her life, and to be able to relocate her close to you rather than you having to always fly to that state to visit her to keep her company, and to have the peace of mind of knowing that she's just, a short drive away. And like I said, even if it's if you live in a more expensive neighborhood, it's still very possible, as long as, she has the equity in her home to put down on the new purchase, and then just do a reverse, and then there's no payments associated with it. So,
another thought I want to add there, if I can. You remember Jesse Itzler, and you're going to know what I'm talking about here.
Of course.
When Jesse Itzler talked about this, where he says, okay, how old are your parents? They're 75. That means you may have 10 to 15 years left with them. But that's not true. Because if you visit your parents once or twice a year, you have maybe 10 to 15 to 30 max visits or experiences with those parents. You don't have 10 or 15 years. And so that goes along perfectly with what you're talking about of, fixing the situation and helping families to get back together.
Let's get tactical now. Okay. Like the coach just came online in me, and let's have some fun here, because so many of our listeners are mortgage professionals. We've spent a lot of time here, almost 55 minutes, getting this all set up with what a reverse mortgage is, why it's powerful, and all of that. But let's get tactical with the marketing stuff for a minute. So we addressed the issue of how you're going to explain this perhaps to a child who, an adult child, and why it makes sense for their parent. Now, that's a really powerful marketing message, one that you just articulated from the Jesse Itzler conversation. And if I'm you, I'm probably swiping that and letting, editing it down, and letting, I'm using that in my marketing for me to share with the children about, look, you only have 30 more moments, 30 more days, however many, experiences, whatever you want to call it, with your mom in the current structure. Wouldn't you want to have more than that? I mean, wouldn't that make your life better and your mom's life better? And I have the tool to help you to help you do that, that nobody really even knows about. So why doesn't anybody know about it? I was talking to our friend Jay Dacey on Wednesday, which was yesterday, I guess. I was coaching him, and we were talking about, I know you and Jay have connected and talked about reverse mortgages. And one of the things that he shared with me is that in the state of Minnesota where he's at, the mindset is pretty deep of the goal and objective here is to pay your home off. That's freedom, is to not have a mortgage. And so much of what we're talking about here is a re-architecting of the psychological belief of what the goal is here, because we're going away from, my home is owned free and clear, to I actually have a mortgage, but I'm just not making payments and I'm actually eating into my equity. So how do you, like, in your marketing as a mortgage professional and in your discussions with borrowers and financial planners, and I know that you do a lot of, I want you to tell us a little bit about how you market yourself, but I know you do a lot of presentations at assisted living facilities or places like that, or old, senior citizen centers and those types of places. Give us a little bit of an understanding of how you source your business, how you explain this, how you re-architect the psychological understanding. But start with how many of them you do a year. How many reverse mortgages will you do in 2022?
So it's interesting. We've grown, and here's a plug for L360. When I first ran into you, it was in Mastermind. I want to say it was 2018, maybe 19. Started coaching with you guys. At the time, I was doing probably around 30 or 40, 50 maybe by myself. Since then, a year. Okay, a year. Yeah, 3 to 5 a month at most months. Through the coaching and dialing in my business and really seeing the scalability of this product. Last year, we ended at about 385 units in 2021. This year, we're on track to just barely pass that. So even though it's been a rougher year, we're still on track at the same volume this year as we were last year. So a couple of things there. Does that answer your question?
Yeah, absolutely. It does. That's incredible. And congratulations. I mean, you're doing roughly what, 35 reverse mortgages a month. And those that know anything about this product know that they're pretty high profit margins. So the numbers are quite impressive, and you're helping people. So it's like there's a win-win-win here that you probably don't have in forward mortgages as substantially as you do in reverse. So how do you generate that business? What's your marketing strategies? And tell us about how you present the product and the psychological re-architecture that I referenced.
So the key, I think, to seeing and being successful with this product is kind of what we've been talking about all day, is you have to see the vision. You have to, and I do on a daily basis, I'll do what I call think time, where I'll just sit down and think for 15 or 30 minutes, just trying to see life through the eyes of my clients, trying to see, the experience they're having with our mailers and those kinds of things. I'm trying to really empathize with what people are experiencing. And you have to see all of the possibilities that this loan does. And again, that's the beauty of doing just one loan, is you can do that. If I offered 500 different loans, I'm not going to get into people's brains as well. But, one thought that came up, you were mentioning, what I think it was Jay was saying about the American dream, pay off your mortgage. I love it when my wealthier clients will come to me and they see the beauty of this loan. I have a lot of clients that are multimillionaires where their home was free and clear. We did a reverse mortgage. They got $500,000 out of their home, and then they went out and bought a couple of investment properties. So now they own 3 homes with no monthly mortgage payment, and they're just cash flowing those properties, right? So again, financial planning tool. But to get into...
Walk us just real quick. I'm sorry to interrupt you, but I don't want you to fly through that scenario quite so quickly. Walk us through in a little bit more detail as to how that was possible, because I think that's really interesting. And I want to make sure everybody gets that you could take out a loan on your existing home that you own free and clear, not make a payment on it, use that money to go buy 2 more investment properties, not make a payment on those, and have positive cash flow. Just walk us through that.
Well, so the beauty of that, again, talking percentages, if I own my home free and clear, I'm getting my average 5% appreciation, right? That's my wealth growth in my real estate portfolio. I have one client in particular that I always think about that does this. He had probably about $3 million in investments, loved to invest, loved to flip properties. And so in his situation, us doing a reverse mortgage was so beneficial, because let's say he finds a home he wants to flip or buy. If he goes to his investments and pulls that money out, he's got to take an extra 20 or 25% just to pay the taxes, right? But with a reverse mortgage, he can take his home that's free and clear. He can access up to $500,000 in his line of credit, tax free. And so now he has this $500,000 and no monthly mortgage payment. And like you say, he goes out and he buys, let's say, 2 townhomes. He goes and buys 2 rental townhomes, and he gets $12 or $15 or $2,000 a month in rental income from those. And they're just cash flow. And those are paid free and clear now. You know what I mean? And so kids are going to inherit all of this, right? But his wealth isn't growing by 5%. It's closer to like 18% when you consider all three properties and appreciation and cash flow. And so it's just a far better way for him to continue increasing his wealth leveraging the money that he already has. So,
man, I don't want to, I'm not any different than anybody else, Trev. Like, I don't want to get older. I want to stay young at heart, at least for as long as possible. And I want this body to work for a long time. But I'm going to tell you something right now, man. I only have 6 years and 2 months left until I'm 62, and then I'm doing one of these, man. Because like, for sure. I mean, I've actually sat around and thought about that, like at home before. I'm like, God darn it. Like, what would I do if I could take out a reverse right now? I mean, first of all, I would take one out for sure. And then secondly, it's like, there's just a myriad of different creative things to do that actually make just a ton of sense. As we continue, and I know I derailed you and I want you to get back into the marketing and presenting and how you source business. But it just is really clear to me that this is also a product that is best marketed by telling stories, actual stories of how it changed people's lives, because it's pretty magical. The more stories you hear about how people can effectively use a reverse mortgage to truly have it be a life-altering event for a positive in a positive direction. So the marketing of it has to entail storytelling. So go ahead. How do you market this thing and how are you getting all this business that you're doing?
So I'll just maybe go back to my story a little bit, and that will help to forecast what people are going to experience. And so, I made this comment in San Miguel, where most forward originators are going to balk at the idea of giving up their current business. And I get that. I've been in the industry for 10 years when I started this company, but that was the decision I made. I said, you know what, I'm going all in. I'm going to do only this product. And I had a junior loan officer, and I essentially just gave him all of my forward business. But I discovered early on that I was holding on to gold that was worthless, right? What gives gold value is the exchange. And so for me, the first thing I did to get going in this business is I recognized the value that my database had for me. Because think about this, if you're a 70-something-year-old and you need information about a reverse mortgage, who are you going to go to first, right? You're going to go to your depository institution, Wells Fargo, Chase, Bank of America. Guess what? They don't do reverse mortgages, right? And so that was the first thing I discovered is that by taking myself out of the forward world, I no longer competed with these people. Realtors are great. I know people love realtors, and I don't want to disparage realtors at all. In this industry, a good realtor may do 50 deals a year, right? Of those, maybe 2 of them are going to be reverse mortgages. And so there's just not a ton of volume partnering with realtors. But if I go to my buddy at State Bank of Southern Utah or Wells Fargo and I say, hey, dude, I've got this forward client that wants to refinance, would you take care of them? Partnership locked in, right? What lender has ever gone to him before and said, hey, here's a client of mine, you have them, right? And since nobody else in the industry is doing this, nobody else is coming to him saying, hey, I do reverse mortgages and I'm not going to compete with you. Who do you think he's going to send his reverse mortgage clients to, right? There's no question. I'm the only guy he knows. And he'll have, most of my lender partners will send us, 12, 15, 25 deals a year. You know what I mean? Because they get so much walk-in traffic of people that just need information. So that would be step number 1, is that you need to decide if you're going to compete with your competitors. Because if you're really wanting to get into this industry full time, that's going to be your quickest source for real great clients is go to the local banks, local loan officers and say, hey, look, I'm not going to compete with you anymore. You send me your reverse, I'll send you my forwards. Let's create a partnership. Beyond that, again, you just need to get into the psyche of baby boomers and the idea that, these are people that they're the most frugal demographic of our society, right? It's not like they're out living swinishly. They're already pinching their pennies to survive retirement. but likewise, they come from an era that was, when my clients were my age, when my clients were 40 years old, it was pre-fax machines. Well, that's not true. Fax machines were just barely coming on. Email was still very, very fresh. Computers.
People were still listening to 8-tracks, though, right?
People were listening to the radio. They were listening to tape decks. They were watching TV real time with commercials. You know what I mean? And so you have to kind of keep that in mind, that that's still the best way to communicate to these people. Our best source of marketing is snail mail, postcards and letters, and TV commercials. Game shows, Jeopardy, Wheel of Fortune, those are the areas where we can go and reach these people in a method that they're used to and that they're accustomed to.
How much does it cost? Give us some financial mechanics. Like, how much does it cost for your direct mail? How many pieces do you send out, and what does it cost? And then how much does it cost for you to advertise when Wheel of Fortune, Jeopardy, and Family Feud are on? Because it's so funny you're saying this, because like I'm thinking of my dad. God bless him. He passed away a few years ago, but like, He never missed Jeopardy. He never missed Wheel of Fortune. He still watched Sanford and Son reruns and All in the Family. And yeah, I mean, that is your demographic target, right? And they're going to stick with what they're comfortable with. So how much do you pay for those ads, both in the TV space and your direct marketing pieces?
It's really strange, because we have, for the most part so far, we've really fallen flat when we tried to do streaming advertisements, digital advertisements where people are, watching on their tablet. Real TV is really, and network TV is really what does the best for us. But to answer your question, for mail, I shoot for a cost per lead somewhere around $300 to $600. For TV, we're somewhere between $1,000 and $2,500. And I can't name names, obviously, for obvious reasons, but the big advertiser in our space, I heard recently, can spend as much as $8,000 per lead. And that obviously isn't sustainable. And so if you're thinking, oh yeah, I'm just going to throw some TV commercials on there, be real careful, because when you dial it in with a lot of experimentation, as I mentioned, yeah, it can really pay off, but it's very expensive to get there. And you could easily blow a $50,000 investment and not get a single lead. So you're spending,
I want to make sure that I understood you correctly there. And by the way, we've never like talked about this, and we should have some coaching time around tweaking and adjusting this, because I have a ton of experience with consumer direct marketing, man. Like, I mean, I did that for the first 6 or 7 years of my career, and I'd love to just get creative with you on it. But I heard you say, $300 to $600 per, postcard or whatever it is the form of mail. And that's one of the things that I'd want to work with you on, because I used to play in that space for a very long time and tweak and adjust, and the things that you like to do strategically to, figure out like, how do I drive my cost of marketing down? But what I didn't quite understand was the TV ad. So like, you're paying $800, did you say, to $1,000? No,
I'm sorry. That's cost per lead. That's what I spend. So that's my average spend to get the phone to ring once.
What's the spend total? Like, okay, so you put out a 30-second piece on TV, I presume. Is it local only in the Southern Utah market, or is it, in the entire state of Utah? So, like, give us a geographic range.
Statewide. Okay. We usually do statewide. In Arizona, you can spend anywhere from $2,000 to $3,000 for one 30-second ad on Jeopardy. And in Utah, anywhere from $800 to $1,200 for a 30-second ad.
Okay, so you're putting a 30-second ad out there. You're spending $800 to $1,200, and you're generally, from one 30-second ad, averaging one lead. Then something like that. Yeah, because it's a repetition game, right? They need to see you statistically something like 15 to 18 times or something before they take action. So how long have you been doing that for? And has it improved? Has the cost gone down as you've saturated the market and become, more repetitive with it?
Kind of the opposite. I mean, we've been doing this since 2020, since the market really took off and we had the funds to experiment with it. But what's interesting is that we found a very strong correlation with politics. When we're leading into a political or to a voting season, our results really fall off a cliff. And for, logical reasons, if people are being blasted with, mailers from politicians and TV ads, smear ads from politicians, they tend to turn off. But as soon as that goes away and we have less competition in the mailbox, that's when it gets good again for us. So
what about I've seen some presentations of yours that you've done that you've sent to me and I've reviewed where you're speaking in front of a room of people. Tell us about that.
So that one again is basic idea is it's a steak in a presentation, right? It's dinner in a presentation. Postcards to invite people or social media to invite people. They come for a meal. We'll fill a room with 20 people. 10 of those are there for the free meal. 5 of those may be seriously interested, and 1 or 2 of them will move forward. So I recommend it because it's a good way to maybe just have like community touch and involvement. It's not a blockbuster way of making money, but generally we do close 1 or 2 deals from every dinner presentation we do.
All right, so you get 1 or 2 deals from a dinner presentation. You get, it costs you $300 to $600 from mailers. It costs you about $800 to $1,200 for a TV spot. Where's the business coming from? Like, where's the sweet spot for you? Where are you generating most of your leads?
Mailers. Okay. We do really well with our mail advertising.
Yeah, I want to see those pieces, and I want to just get creative with you, because like that was something that I used to do a ton of, man, back in the early 90s. A lot of consumer direct marketing with mailers and inserts in the Los Angeles Times, and there were weird things that generated much greater results, like the color of the paper that it's on, like, and things that just stand out more. And if you can evoke emotion in the marketing, or if you could have a testimonial from somebody on it that's their age with their photo and that kind of stuff. So, okay. But so we're talking marketing, and we're talking about how to, get in front of people, but what's the temperament that is important that you have once you talk to them? Because I have to think that, talking to somebody who's older and that has a lot of fear and trepidation and is conservative, and doesn't understand and is easily overwhelmed. Like I could easily think about like talking to my mom as an example. I mean, I described her just now pretty well. Like you're not going to want like a type A in your face salesperson dealing with somebody like that, right? Like it's a different temperament.
It's interesting thinking of my own team. I have, a couple of my top producers are in their mid to late 20s. They're just young bucks, you know what I mean? But I also have some good producers that are it's the same demographic. They're boomers. They're 60, late 60s. And so they really associate well with our clientele. But you're absolutely right. This isn't a fast pace industry, kind of like the forward side of things. And that, again, is one of the reasons why I personally have gravitated more towards the refi business and not the purchase so much, is because for a lot of our clients, I mean, if they have a doctor appointment Tuesday morning at 9:00, the whole day is clocked out, right? They're not doing anything else on Tuesday. And so they move at a more comfortable pace. And likewise, you need to mirror that when you're dealing with them, because if you're rushed and forceful and pushy, you're going to lose trust. Aside from that, I mean, it just goes back to the characteristics that salespeople should have in general. And you teach this stuff all the time. People know if you care about them. The way you talk to them, the way you interact with them, it comes through in the way that you speak. And so I think that's one of the reasons why I've done so well in this industry, is because I am a little bit calmer personality. I'm I'm a high S. And so I'm just a little bit easier for them to deal with and build trust with. But you need to understand that you'll call clients sometimes and they just want to talk to somebody, right? You may be the first person they've talked to in 3 days. They got to tell somebody about their grandkids. And so just shut up and listen for a while. And that's how you build trust. And that's how you win these people long-term. It's just, don't be their loan officer, be their friend, or be their consultant, be their buddy that's going to help them make a good decision. So.
Speaking of be their friend and them moving at a slower pace. I'm curious as to what I've never asked you this before, but what's your database nurturing strategy? So like, you go do the steak dinner and, 5 people show interest and you said 1 or 2 of them actually end up doing a loan with you. But what about the other 3 to 4? Like, do you continue to stay in front of them? And if so, how do you do it? Because like, it could be that a life event needs to happen 2 years from now for them to realize, yes, now's the time. How do you go about that?
We do a really good job of mining our database. I've got 14 loan officers now on my team, and so they're constantly, every day they're calling through the database, just retouching or reconnecting with these people. In addition to that, our past clients get kind of the perfect loan process experience where after closing, they're getting closing gifts, they're getting thank you cards, they're getting personal phone calls. We're touching base after 2 months to make sure they know how to read their mortgage statement. We're contacting them on their birthdays. We're doing the annual loan review on month 11, a month before their actual loan review or their actual annual date. And so but in addition to that, we're also trying to find ways to add value. We send newsletters, and my own version. The hard thing with this industry is that we're just slightly different from the forward side of things. And so I've had to invent a lot of my own systems and products. For example, HomeBot, I know is really great for the forward side of the industry. We don't have anything like that. And so I've essentially had to create my own that does a similar thing, and keeps people in tune on what's happening with their home in the market. And every homeowner loves that. They love being informed on what's happening with their home. And it's a value touch that they've really appreciated. So
what's your approach? How much do you pursue CFPs? That was the thing that Jay and I were talking about yesterday, is that he really feels like for him, the approach that he wants to take in Minnesota is to not have to try to conquer the world by being the guy who re-educates, the people of Minnesota on why paying their home off is not the right approach. He feels like going to the financial planners who already have a pre-established relationship and trust has been built, and are viewed as true advisors, and partnering with them is the better approach. What are your thoughts on that? And do you actually work with, CFPs in this capacity?
You would think that this would be a no-brainer. It goes back to the scenario we were talking about earlier with your mom. The idea that if I'm drawing $3,000 a month from my retirement accounts that are making 8 to 12%, and I can stop doing that, you would think financial planners would be all over this product. But yes, I do I have some really great financial planners who catch the vision of it and have really endorsed it, gone crazy with it. But this leads maybe to a next discussion, which is what's holding this industry back, and maybe forecasting into the future. Maybe that's where we should go from here. Is the problem with reverse mortgages right now is that the reputation just still kind of sucks, in that most people, when they hear, well, let's use this analogy, and I use this in San Miguel, but since I thought about it, it's such a perfect analogy, in that, Viagra was a miracle drug. It really was. The fact that the industry produced this drug that has had such a benefit on humanity is a good thing, right? And there are millions of people using it, but you don't jump on Facebook and hear about your buddy or your grandpa or your dad or whatever, you celebrating Viagra, right? Nobody gets on Facebook and celebrates that they use Viagra.
You're following the wrong people on Facebook, clearly. Like, we need to get you some new friends, man.
But the point is that even though this is adding so much good to people's lives, people don't celebrate it the way they should. Reverse mortgages is exactly the same. Of the 1,500 loans I've done and the 1,500 clients we've helped, I have maybe 2 that are not happy with the loan for varied reasons. Almost everybody that has a reverse mortgage loves them. And the reason they're not telling everybody about it is because they're embarrassed. They're embarrassed to admit that I was in a situation that I had to do something because financially I wasn't surviving. That's embarrassing for people.
Wow, great point. Like, I never connected those dots. That's powerful. Yeah.
And so the way to fix our industry at some point in time, and I don't know if this is 3 years or 5 years down the road, but there will be a tipping point where we reach mass acceptance, and we'll go from 60,000 units a year to 6 million units a year, or 600,000 at least, right? When I retire in 25 or 30 years, having a reverse mortgage will be as common as having a pension or a 401k. It'll just be what you do when you retire. To get us to that point, therein lies the battle. Because even in today's world, financial planners will go to continuing education conferences and whatnot, and they will be actively taught that reverse mortgages are still the devil. Steer your clients away from them because they're still operating off of antiquated mindsets. And so this is where our job comes in, is we've got to sit down with these CFPs and really educate them on what this product is and what it could mean for their clients. Because as you mentioned, a good CFP has dozens, hundreds of clients whose lives would be dramatically improved by having a reverse mortgage.
I'm often asked the question, what is coaching and how will it benefit me? I want you to think of a coach as an ally, a partner in helping you establish a game plan and to hold you accountable to assisting you in achieving the highest levels of success that you're capable of. The Performance Experts Performance Accelerator coaching program is a one-on-one 12-month coaching program that pairs you with a certified coach with the Performance Experts company. Every month, you'll have 2 50-minute private coaching sessions with your coach, and you will establish a business and life plan that will assist you in achieving the levels of success that you're seeking. It also comes with the Complete Referral Partner Success System, which is a program that I designed a few years ago to help you cultivate relationships with referral partners. If you're interested in finding out more about our Performance Accelerator coaching program, you can simply apply online and set up a free exploratory call. The link can be found in the description of this podcast, or you can go to www.mortgagecoachingnow.com. Once again, www.mortgagecoachingnow.com. Click on Get a Coach and set up a time for us to explore whether or not we can help you. Yeah, and I would have to imagine that some of their trepidation in endorsing it is, I mean, a CFP's livelihood is based upon, that client staying with them for a long period of time, right? So like they don't want anything that would ever compromise their annuity income associated with managing that client's money. So that's where this grassroots effort on your part to systematically, one person at a time, educate CFPs, tell the stories, maybe capture testimonials. But I really hear you on that tricky part about the consumer being embarrassed of that they were in a tough spot and that they needed to do this. But I'm super impressed with how far you've come without a lot of help from the outside world. I mean, you're doing this on your own with your team. Like one other question I have just for the listeners that are in the mortgage profession, what's the average check size that you generate for every transaction you do?
So I don't know quick answer to your question. We shoot for average revenue around 10,000. So keep in mind that a lot of the people that are listening to this probably have average loan amounts of $400,000 to $500,000. Because of the nature of our loan, our average loan amount is about $225,000. So we have smaller loan amounts. I don't charge origination fees, a lot of origination for most of our clients. And so for us, we shoot for about 10,000 in revenue. However, and this may be disturbing to a lot of people, I know of many other competitors of mine that shoot for 17 to 25,000 in revenue per loan. I mean, and that goes back again to some of those old negativities and myths that exist around the product, and that they're very expensive. And unfortunately, that still happens where loan officers or lenders are just gouging people and really, really taking as much as possible. So simple answer, about 10,000, but I know there are people out there that make way, way more than that.
What's a fun fact about Trevor Carlson that I don't know? Anything that you want to share?
this is a weird quirk. I can't eat, my wife teases me because I can't eat carrots if they are shaped weird. The little baby carrots that look like fingers. Yeah. I can't do it. Can't do it. Grosses me out. So
I could have never forecasted that as your answer. Brother, thank you so much for taking the time to spend with me and for teaching the listeners today about the product that you're so passionate about. Thank you for helping people. I probably should have said this about an hour and a half ago. But for the listener, I mean, I know Trevor quite well at this point, and he is somebody who has a huge heart and really cares about people, and has an integrity level that is off the charts. And the people that he serves, those 400 or so people that he did loans for, are very lucky to have him shepherding them to that place. I mean, yeah, thanks for being you, man. Thanks for, I mean, everybody in the L360 family loves you. Everybody's impressed by you. Everybody knows who you are as a man. And we're all really proud to know you and to learn from you. And for those of you that are listening, that are pondering getting into this product, remember what he said at the beginning, take it seriously, become a student of the product, focus, and be great at it. Trevor, is there anywhere that if people have any questions for you, and I don't mean to put you on the spot, is there somewhere that I can direct them to get access to you?
Yeah, that'd be great. And I guess to go along with that, Tim, you built such a really great community, and I've always been impressed with L360 because everybody is so open, and technically we're competitors nationally, often in the same market, but I love that everybody in the group is so open, so helpful, so willing to give and share to each other. And I kind of want to reiterate that myself. If people need to kind of talk through this and walk through this and get pointers and marketing ideas and that, I'm always willing to help, because again, I see the benefit of an open community. We want to push for mass acceptance of this product, and the more people we can get into the product, the sooner the better. But to answer your question, they can follow me on Instagram. We just barely started a page. It's the.hecm.guru. Facebook is the same tagline, heritagereversemortgage.com. But if they want to connect with me personally, just shoot me an email at trevor@heritagehl.com. So,
Merry Christmas, bro.
Yeah, you too. Thank you, Tim.
I hope that you and your family have a beautiful holidays, and I'll definitely look forward to talking to you in 2023.
Thanks, brother. You too.
Thanks, everyone, for listening, and stick around for the post-coaching comments. Bye-bye.